Looking to take your financial knowledge to the next level? You're in the right place. Welcome to Ask Ralph, offering accounting, technical, and financial advice. Whether you're looking to save taxes or improve your business, he's got you covered. Here's your host of Ask Ralph, Ralph Eastup Jr.
Welcome back to the Ask Ralph Show as I continue my discussion of cryptocurrency. This is part 2 of a segment on cryptocurrency. So if you listen to our last segment, we really talked about the definition of cryptocurrency and we talked about the history of how it was created. Now I thought I'd spend some time talking about, okay, now that you have this cryptocurrency, what can you do with it? Well, the first thing you can obviously do is buy goods with this. Now, it used to be with this cryptocurrency, it was extremely difficult, if not impossible, to find people to deal with this and to exchange it. But now there are a lot of merchants, both online and offline, that accept Bitcoin as the form of payment. Now that includes Bitcoin and other, cryptocurrencies. Now they range from massive retailers like Overstock and Newegg to small local shops, bars, and restaurants. You can pay for hotels, flights, jewelry, apps, computer parts, and even a college degree. Now other digital currencies like Litecoin, Ripple, and Ethereum aren't as accepted as widely yet. But that's changing. Now, one of the reasons that's changing is that Apple has just authorized 10 different cryptocurrencies as a viable form of payment on their App Store. So you could say that once Apple makes a move, they're introducing stability into the market and saying, hey, yeah, we're going to accept those currencies. Now, what you need to know, and of course, users of these other cryptocurrencies, other than Bitcoin, can always exchange their coins for Bitcoins. And then, to the extent of can you buy anything? Yeah, I mean, there are gift card selling websites like Giftoff, which accepts around 20 different cryptocurrencies. So through gift cards, you can essentially buy anything with a cryptocurrency. So, in other words, if you wanted to go, buy, a new printer for your computer, something like that, if the particular online retailer or shop doesn't take, one of these cryptocurrencies, you can certainly buy a gift card with your cryptocurrency to pay for that as well. There are also marketplaces which are developing now called Bitify and OpenBazaar that only accept cryptocurrencies. And you can look at, different things there in the market. You can take a look for what retailers accept Bitcoin and all that sort of thing. So that's really the first thing you can do is you can buy goods. The second thing is you can invest. And this is really what piqued my curiosity when a client had mentioned to me, hey, Ralph, I just made an investment in one of these cryptocurrencies. He says, I really don't understand it, but, it seemed like a good thing to invest in, so I went ahead and do that. And that's the truth. Right now, these cryptocurrencies are one of the hottest investment opportunities available. And there are a ton of stories about people making, millions through their investments in Bitcoin. Now, I use Bitcoin because it's the most recognizable digital currency to date. Now, and it was valued. Now, this particular article was written November 27, 2017, at the price of one Bitcoin exceeded $7,000, and it's gone up and down since then. Now, one of the other cryptocurrencies, Ethereum, and I'm not sure I'm saying that right, but it's ETHEREUM, perhaps the second most widely valued cryptocurrency, has recorded the fastest rise as a digital currency ever demonstrated. It launched in May 2016, and its value increased by 2,700%. So that's a big number, but it's also worth noting that you are taking a risk with these cryptocurrencies. They are definitely high risk investments. And why is that? Well, their market value fluctuates like no other asset. And the main reason that is it's partly unregulated. There's always a risk of some country outlawing these things, or in certain jurisdictions, and cryptocurrency exchange can potentially get hacked. If you're dealing with something that isn't a physical thing, the old adage was, in the old Westerns, they'd rob the bank. Well, what would they take? Well, they would take the dollar bills, or they would take the gold coins, or they would take the, the bearer bonds. Well, with Bitcoin and other, currencies, you don't even have to leave your home. If you've got a computer that you can hack into, someone's Bitcoin information, you could potentially steal their Bitcoin and basically steal their investment. Now, so if you decide to invest in these things, and like I've said many times, I am not a giver of investment advice, but Bitcoin is definitely the most dominant one. But that's really changed. In 2017, its share of crypto market has quite dramatically fallen from 90% to 40% because there's many more options available, with some coins being privacy focused, others being less open and decentralized in Bitcoin, and some just outright copying. So there's been a lot of, copycats on the market. It's kind of like, you read articles, there's the Apple iPhone, and then, maybe some folks overseas in Asia have developed a phone that looks just like the Apple iPhone. Well, what people don't understand is there's a lot of, hacking or fraud in that regard. And they're just taking the Apple design, tearing it apart and building their own, which is basically a replica of that. So if you're going to get involved in investing, you need to understand that, getting involved in these cryptocurrencies is not as easy as, the normal, go to the bank and buy a CD or go to the, your investment house and purchase some assets. But, that is starting to change. And there are major exchanges of, cryptocurrency. And I'll throw a couple names out there like Kraken, Bitfinex, that's Bitfinex, Bitstamp, and many others starting to sell Litecoin, Ethereum, Monero, Ripple, and so on. I think there's some funny names. I got to say that's the truth. Now, and then of course there's always the ability to trade these things face to face with the seller, or they, believe it or not, they even have Bitcoin ATMs. So we've talked about, you buy things with it, you can invest with it. Well, once you get it, then the big question is, how do you store it? And that's where we start talking about wallet services. It's best if you store your assets in an offline wallet on your hard drive, or even invest in a hardware wallet. See, the whole point of this is, you don't want to leave it out there onto a computer that's connected to the internet, because potentially somebody could hack it and steal your coins. That's the most secure way of storing your coins, and it gives you full control of your assets. So you're not relying on any exchange to house those assets. Think about it in terms of, if you've got an investment portfolio with, Morgan Stanley. Well, Morgan Stanley is holding your assets. So, you're at the mercy of Morgan Stanley. If somebody hacks Morgan Stanley, then potentially they could transfer their funds to you or to someone else, and you would lose them. Or, maybe Morgan Stanley, has a theft or something like that. Well, these cryptocurrencies work the same way. So if you've got them, if you've got your cryptocurrency stored on a third-party service and they get hacked, you might lose those. This is something you need to pay very close attention to, and the market value of these things, because like I said, they're very volatile. So if you're going to be an investor in this, one of the big ones to look at is CoinMarketCap. It's a one-stop solution for tracking the price, volume, circulation, supply, and market cap of most existing cryptocurrencies. Now, you also you need to talk a little bit about what happens with these cryptocurrencies when you're trading them or when you're buying and selling them. So one of the things we're going to talk about in our next section of the program is, depending upon the jurisdiction where you live, investing in cryptocurrencies, you might run into some tax issues. So again, getting back to our first, we talked about what is a cryptocurrency. Then we talked about what you can do with it. You can buy goods with it. You can invest in it. Then we talked about, how you're going to store these things and the difference between a public storage place and a offline, private hardware, a hardware wallet. So in our next section, we'll start talking about some of the tax issues related to this.
You've been listening to Ask Ralph, brought to you by Saggio Accounting Plus. Please subscribe to and rate our podcast on Apple Podcasts or wherever you get your podcasts, and leave us a rating and review. Our podcast is produced by Carolyn Peters. Thank you for listening, and be sure to like us on Facebook and follow us on Twitter at Ask Ralph Media. You can also hear me each week on 1450 WILM and on 1410 WDOV in Delaware, and on the iHeartRadio app. Submit your questions or ideas for future shows by sending an email to AskRalph@AskRalph.com.
The information contained in this episode of Ask Ralph is based on data available as of the date of its release. Saggio Accounting Plus and Ask Ralph Media Inc. is under no obligation to update this content if changes occur. Applying this information to your specific situation requires careful consideration of all facts and circumstances, and any information provided is not to be considered as financial, tax, or legal advice. Please consult your tax advisor or attorney before acting on any material covered.